7 months ago, I made a stock portfolio video. I think it is definitely time for an update. 7 months ago, my portfolio consisted of 12 holdings, and the value was $1,191.82. My total return at the time was 13.51%. This was on February 12th, 2023, and the portfolio was made on June 16th, 2022. So this brings us to today. Hey everybody, it's been a while since I've made one of these videos, so I'm excited. Let's hop into my Robinhood portfolio. Currently, the value is $2,605.99. So I'm honestly pretty proud of that, looking back on my progress, because my portfolio has more than doubled, but also I've contributed a lot to it. So one day, this is what it is. 1 week, down 2.04%. 1 month, down 1.38%. 3 months, we are up 5.20%. And year to date, we are doing extremely well. We're doing 22.21%. 1 year, 18.7%. And all-time, 23.01%. And also now, Robinhood does features where you can compare your portfolio to other things. So let's start off with VTI. All time, we are beating them by a lot. So I'm pretty proud of that. I'll go down to 1 year. 1 year, we're outperforming a lot as well. And then year to date, I don't think it updated. And year to date, this is what it is. So pretty proud of that. But how about Berkshire Hathaway B? How are we doing in terms of that? So year to date, outperforming. 1 year, outperforming. And all time, a huge outperformance. So we'll get into the holdings, but I'm definitely very proud of how I've been doing, I guess. And now let's try Apple. And we'll do Tesla and Nvidia after this as well too, but all time outperforming Apple. But 1 year and other stuff is kind of iffy. You can kind of see that this is a lot of like timing stuff. There's times when it was above me and I was above it, but year to date we're not performing. We're not beating Apple, but all time we are, which is good. So let's like switch Berkshire and Apple out, and let's put like the big ones like Tesla and Nvidia, which have been doing very well this year. So we can do it all at once. So year to date, they've been destroying. Of course, these are like individual holdings, and also I didn't look at Nvidia compared to my portfolio until now, but yeah, that was a good pick this year. So yeah, in terms of my line with Tesla, we're around even, a little outperformance, but Nvidia just went absolutely ballistic this year. So anybody who's in that, be very happy with your portfolio. So yeah, let's get into it. I am currently carrying cash, $137 of buying power. Oh, also, just in case anybody wants to know, my money invest is $2,118.47, and that is how much I've earned all time. But yep, I'm currently carrying cash, and my reason for this is because I do think that we're going to see some weakness within the US stock market. I can go way more into detail, but basically I've been looking at like the Buffett indicator. I'll put that on screen over here so you guys can see, but basically the US stock market is way above the US GDP. I think that's how it's calculated, and either the US economy has to move up and like become that value, or we're just overvalued, which I like to think we're just pretty overvalued, and that's why I'm carrying cash. But personally, that's just my opinion, so who's to say? So I have all of my companies in terms of weighting, and my biggest position as of right now is Berkshire Hathaway B. The reason I hold a BRK.B share is because I plan on going to the annual meeting next year, because Warren Buffett's getting old. I've looked up to him for a long time, used a lot of his advice as help me with my investments, so I think it would be great to be there, see other investors, and honestly it just looks like a great time. So yep, up 1.48% on that, and I think you saw my percentage of my portfolio that it's in. My second biggest position, which I don't think I had last time, Berkshire I didn't have last time either, but this is Bank of Hawaii. I am from Hawaii, born and raised there. So it makes up a lot of my portfolio, 14.26%, and my total return right now is 5.85%. I have a really good dividend on this. That's one of the main reasons I like it. I really don't think that this company would go bankrupt, but yeah, the dividends are very nice, and that's why I like this company. So these ones I had last time, and I've just held. But yeah, let's get into it. Adidas I have is 11.44% of my portfolio. You can only buy this in full shares, so I just got really lucky with my buys, and we're up 42.86% on my total return, and I never really plan on selling these shares, so very glad I have that. My next company is Tesla. 11.18% of my portfolio, up 60%, 60.33%. Nothing to say there. I have Amazon, and I gotta check real quick because I have it written down. This was a big loser for me in my last portfolio video. I was down 6.94%, and I don't know if I added to it or not. I think I definitely did, but yeah, it's up 35.78%. So I was right, I guess, but whatever. One of my favorite dividend stocks is Starbucks. 5.7% of my portfolio, down 6.39%. It's not doing that great, but I have faith in the company. Pays a really good dividend, and I don't lose sleep over holding it, so just kind of letting the drip shares accumulate and building it more and more. So next up is Gulf, another dividend stock I'm very happy to hold. And yeah, this is like Titleist and FootJoy. If you do golf, that's like golf balls, clubs, and shoes, and clothing, I guess. So this is 5.64% of my portfolio, and a total return of 14.3%. So doing well on that one. McDonald's, one of my companies as well, pays a good dividend, and it is 5.13% of my portfolio. Total return is 4.29%. So let's keep going. Netflix, portfolio diversity 4.67%, up 27.66%, so doing really well. Very happy with this holding. And then VTI. So last time VTI was, let me see, 37.83% of my portfolio. So it was worth $451 about. And right now it is only $107 of my whole portfolio, making up 4.34%. And all I did was move that money into Berkshire, and my portfolio also grew during that time, so it's less, but still totally, I wouldn't have said this when I first started my investment journey, but index funds, ETFs, VTI, VOO, Schwab funds like SCHD, SCHG, dividend, and also growth funds like, I'll show you later. they're kind of the way to go and less stress, but that's what you learn from doing investing, I guess. So this is Coca-Cola, KO. It's important for later. This is 3.87% of my portfolio, and I'm down on this. This has not been an outperformer in terms of the market, but I kind of just, I don't know, hold it for the history, and pays a good dividend. Don't lose sleep over it. And I drink a decent amount of Coca-Cola products. Don't think they'll ever go bankrupt, so that's good. Next holding is Apple. Didn't really add much. Actually, I did kind of add a little bit to this. I added like $30, I want to say. 2.23% of my portfolio, up 9.67%. I do have long-term goals to add more to this position, as I feel Apple will continue to dominate, but that's for another video. Next holding is Costco. 2.37% of my portfolio, up 9.22%. Not much to say about this other than everyone loves Costco. And then this is why it was important. I also hold Coca-Cola Consolidated. So the difference between Coca-Cola, let me see what the title of KO is. This is just Coca-Cola Company, and this is Coca-Cola, this is Coca-Cola Consolidated. So the difference between these two companies is this is the bottler for the Coca-Cola products, and this has been focused completely on growth, and they've been performing really well, which I'll show you. But this is 2.26% of my portfolio, and right now it's only up 1.4%. But past performance does not dictate future results, but within the past 5 years, they're up 264%. So I just put a little bit in there and did enough research to know that it's a good company and that I want to own a few shares. This is my smallest holding of that I want to continue to build, which is MasterCard. I kind of just made an initial position. It's 1.67% of my portfolio, up 3.06%. One of the biggest, other than Visa card, like debit card and credit card companies, so very good to have. And then this is the company that I wanted to put against my portfolio. This is SCHG, Schwab US Large Cap Growth ETF. And I've been dollar cost averaging into it, doing recurring buys. I turned it off for now because I think that the market will continue to go down a little bit. But yeah, the total return on this is negative 0.53%. And you can see that I have a daily buy on it. Currently, my daily buys are VTI, Coca-Cola, and SCHG. And then these are all of my returns since I've owned these companies. And then let's see total percentage, total return in dollars. That's all of them. This is doesn't look, no, it is true. So yeah, that's that. And what I wanted to show was, let's just take out NVIDIA and so show SCHG, and why you should just kind of stick to like ETFs and stuff, because you can see from here it's way less stress if you don't know what you're doing, and they manage the money for you for a very low yield. Actually, I think it's 0.04, which is very good, and I'm barely beating it. And I don't know if that's like a good or bad thing, because I'm not a professional investor like these companies, but it's a lot less stress. And here I'm showing you, they outperformed me the past year to date, outperformed me past 3 months, 1 month. But yeah, so if you don't know what you're doing, look into, I'll put a list of 4. Also, I'm not a financial advisor, but yeah, okay. Yeah, that's kind of my portfolio update. Very proud to see where I've come since I made that last video 7 months ago. And my crypto, you can do the math. I put that on the photo of how much I hold. I haven't bought or sold any this year, so that's kind of just been sitting there. But thank you so much if you made it to the end. Later this week, I'll be making a video about how much dividend income my portfolio generates. Please subscribe.